Next guest earned the nickname of the Oracle of Tampa for his stellar performance managing that city's fire and police pension fund. And despite being a small shop, his returns have routinely put him in the top 1% of all pension fund managers. Jay Bowen joins us again from Atlanta. Jay, welcome back.
Thanks. Good to be here.
Yeah, it's good to have you. How are you feeling about the market right now?
I agree with the panel's comments regarding monetary policy and central bank activity. We're top-down and thematic, and I think this is very much a monetary story, both domestically and internationally. Really, you've got every major central bank around the world fighting the same battle. They're trying to vanquish these lingering inflationary demons, deflationary demons, and they're doing it with liquidity. And the market likes that. I think the market action on Friday was completely about the BOJ. That is the equivalent of a bazooka in terms of the increase in their annual monetary base target. You've got the ECB on deck, possibly Thursday, and so global monetary accommodation, I think, is certainly a positive for the market. In terms of some of the themes that we're looking at, I think this increase in the foreign exchange value of the dollar is significant and has real investment implications. Our view is that this is a secular move, a secular bull market in the dollar, and it reminds me a little bit about a little bit similar to the early 80s in terms of, I think the first leg of this move is going to be for monetary reasons, and that's occurring now. The second leg, probably 3 to 5 years out, is going to be more for fiscal and regulatory policy reasons. And of course, back then it culminated in the Plaza Accord in '85. I think dollar yen was 250, and the dollar appreciated about 50% against the yen and a variety of European currencies. So I think this has real investment implications, and we're starting to structure our portfolios accordingly.
Okay, so let's go there. You know, you can call somebody the Oracle. You want to get some stock picks from them as well. So given that, given what you just said, what do you like right here and right now?
In terms of the appreciating dollar, of course, part of this is declining energy prices, and I think it's somewhat underreported. The market has basically been able to accomplish what the policymakers couldn't or would not do, and that is a multi-billion-dollar tax cut for consumers and individuals. If we hang around here at $80, $85 a barrel, we're talking about in excess of $100 billion to the consumer. And it's also very meaningful for business in terms of lowering their input costs. And so we're looking at a company, for instance, a good example in the materials area would be International Paper. I think they're going to benefit from lower raw material costs, lower transportation costs. They also have tremendous free cash flow. And the company has been very focused on returning capital to their shareholders in terms of stock buybacks and dividend increases. A few months ago, they implemented a $1.5 billion stock buyback plan, which they're finishing ahead of schedule. Also recently increased their dividend 14%. And even after the run-up in the stock over the last couple of weeks, it still yields over 3%. So that would be a good example of a company that, number one, is focused on North America, about 75% of the revenues. Number two, will benefit from the stronger dollar and lower energy prices.
Talk to me about Novartis. It's on your list as well.
Yeah, I think it makes sense in here to look at European consumer-oriented companies that have strong North American revenues and earnings. And you got companies, and also that aren't too tied to European industrial production, which I think is going to continue to stagnate. So if you can look at the consumer companies like a Nestle or a Novartis that also have good fundamentals and attractive dividends, they're going to really get a kicker, a tailwind when they convert their earnings back into either euros or Swiss francs. And those are just two examples. I think it's interesting that sector, the consumer staple sector in Europe, to look at some companies that have strong North American revenues. That's not the only reason to buy them, but it's certainly they're certainly going to have a tailwind.
And briefly, Jay, before I let you run, can you talk about Leggett & Platt, LEG?
Yeah, that would be more of a mid-cap name. It's a superbly managed company based in St. Louis, and they manufacture a variety of engineered products for the consumer and residential areas. Again, another example, they're about 80% focused on the domestic market, so they're not tied to European industrial production or emerging markets. They're going to benefit from lower raw material costs, particularly petroleum and scrap metal. That goes into a lot of their products. So I think the potential's there for margin expansion. Also, the other potential catalyst there is that I think they're going to be selling off some of their lower margin businesses in 2015, for instance, the fixtures business, and redeploying that cash into higher margin businesses. And importantly, the dividend is, even after the run-up on strong earnings last week, the stock still yields, I think, about 3.2%. So very shareholder-friendly in that regard.
Hey, Jay, I appreciate your time as always. We'll look forward to seeing you again soon.